Welcome once again to Wealth in the Winner's Circle with Harley Shanklin and Dave Williams of RDW Financial Group. I'm your host, Spike Spangle. Gentlemen, how are you both doing this week?
Doing fabulous, Spike.
Good.
Fantastic.
Harley, doing well?
Always doing well. Good
Dave,
to be here.
You said you wanted to kick it off. What are we talking about today?
Today we're going to talk about risk on or risk off.
I think we just got a copyright infringement there, but okay. I like where you're going with it. But risk on, risk off. When do we take risk? When do we try to avoid it? It's a good start. Next time, let's run it by our copy people, Dave.
Noted.
Good place to go. I'll start with you, Harley. What do we want to start with? The kinds of questions you ask? I mean, I would imagine the three of us, just between us alone, have different concepts of risk depending on what we're doing. You know, if you like to race cars, obviously.
Let's have some fun with it, Spike.
All right.
Let's have some fun with it. I'll shoot questions to you. We can get Dave in here. You and I are the younger ones in here.
Uh-oh.
Dave brings the
experience, the wisdom,
maturity.
He's been marinating.
He'll be our financial Miyagi. Can we say that? We're really in trouble.
What a day.
All right, bring it. So you're going to hit me with some of the risk questions. Dave, I'm probably going to need your help, though.
Sure. I think this is an important one, Spike, when we sit down and start to think about risk and retirement. Most of us, we don't have a transition when we're going from our working years into our retirement years, and there needs to be that transition. And it's important to go through just a series of questions to kind of start to gauge what that looks like, at least from an emotional perspective. So anytime someone comes to sit down, one of the first questions that we'll ask is, what type of investor do you consider yourself? And this, Spike, is where I'll go to you, is do you consider yourself a conservative investor, a moderate, or aggressive?
All right. Well, to be honest, I would say moderate aggressive. I have read a bit, and so hopefully I'm learning from you guys and from programs like this. I realize that I've got a little bit longer timeline, hopefully another 20 or more years while I'm going to save. So I realize there's some up and down, but I will say I'm a little bit more moderate than even friends of mine. I don't like to take losses. Now, I'm a little bit further away. Dave, from your experience, how do people usually answer that question a year or two from retirement?
Well, the older you get, the wiser you get, Spike. You know, it's that maturing process, that marinating process we go through, as you said. Now, conservatively moderate, I'm seeing as people get closer to retirement. A lot of it depends on the assets too, but there's no question, as we get older and seeing what we've seen over the last 20 years, much more conservative than anywhere 20 or 30s.
Now, is there a way that we would be answering? Are we looking at words conservative or aggressive because of who we are? You're not talking about this kind of with a political background to it. You mean conservative? Well, I seriously mean because of today's times.
Sure.
Does that mean something different in 2025, going into 2026, et cetera? Do we need to be more conservative because of market volatility, or is it more about age and where you're at?
It's more about age and where you're at. Now, age isn't the only factor in there, Spike. We also have to take into consideration how many assets, what's the size of the assets, and then what is the need of those assets as far as from an income perspective, how much income is that going to need to generate? That's definitely a part of it, as well as your age and everything else. Has nothing to do with politics.
Yeah.
Nothing to do with, leave politics out of it. Don't take that into consideration with your investments out there. It comes down to you as an individual. And so when I ask for conservative versus moderate or aggressive, it's more how you feel. You don't want to lose any money, right? A lot of you out there watching right now probably are in that stage where you see the market volatility, you see your 401k or IRA go down, and you think, oh my gosh, I'm taking too much risk out there. But without taking into consideration these other areas, it's hard to really determine what that is. So let's throw some real numbers at it, Spike.
Okay.
Let's throw some real numbers at it. So let's just say that you have $1 million IRA or 401k out there, and the market drops 20%, and you lose $200,000.
Well, I got to say, quite honestly, there's been similar numbers to what has happened in the beginning of this year. Again, though, my perspective from where I'm at in my working in age, I'm hoping and assuming it's going to recover itself and probably even grow from there. But I'll tell you what, I'm talking to my dad, I'm talking to other folk. What about clients?
You know, Spike, at this point, 20%, $200,000, $1 million. When we get to a certain point in our life, there's a couple of things that happen. One, we stop buying green bananas, okay? and we do that. Listen, time is a factor here. We don't have the recovery time. $200,000, a 20% loss on a $1 million portfolio is a huge hit. And I can't absorb that kind of volatility and that risk as my children can, because they have a lot more time to make it up. And I have to take that asset now and not grow it. I've got to utilize it to provide for me in my retirement.
Is your 401k provider or TSP or 403b or 457, are they calling you and reaching out to the clients, the folks who are using all these wonderful companies around the Indianapolis, Indiana area? Do they reach out to you during market volatility and say, hey, we think you're a little too old for this, or getting a little closer to retirement? Are they helping you?
Absolutely not. I think for those viewers out there who may be watching right now, I would venture to guess that you've never seen, let alone spoken to, your 401k representative, especially if you work for a large corporation. They may as well be a figment of our imagination out there. No one is showing up to tell you that. And if they are, once again, all they're doing is just looking at your age. They're not looking at anything else. They're not going to take into consideration everything that we do within our START planning process, where we look at every other aspect of your life, your financial life, to ensure that the amount of risk you're taking is right for you. We don't just want to look at the investments themselves, Spike.
All right. We're going to continue on trying to identify your own risk profile yourself. For those of you who've walked into a financial representative's office, this is usually where it starts. We thought we'd air it out here today, so maybe you get a more comfortable idea of where your risk is. Because when we come back, I want to ask you, how many times when somebody self-identifies as moderate, are their investments actually showing you something completely different? Maybe we can talk about that when we get back. You, our viewers, you can get started on your own SMART retirement review process. You can call the phone number right now down on the bottom of the screen, or you can scratch it down. You can call it later. Continue to watch the following message. Or really, really easily, open up your phone to the camera function, point it at this QR code, and then click on it. It'll take you over to our landing page. You can schedule your own complimentary appointment right there. More Wealth in the Winner's Circle when we get back right after this.
As a good saver, you've been putting away money during your working years. Studies find that the biggest fear of retirees is running out of money. Market volatility isn't just the downward movement of stock prices, it's the size and frequency of change. The more dramatic the ups and downs, the higher the volatility. This can put savers who are newly retired or a few years away from being retired at greater risk. Today's generation of retirees is not receiving traditional pensions as our parents or grandparents did. Instead, we have retirement accounts such as 401ks or 403bs. These accounts typically expose your money to market risk. The last thing you want right before retirement is to lose a portion of the money you need for income. But how do you turn these accounts into a retirement income? Is it safe to keep all your retirement money sitting in the stock market? The last thing you want is to lose a portion of the money you need for income due to market loss. By working with a financial professional, you can learn how to turn a portion of your savings into an income stream for life, and income for the life of your spouse if you're married. We all have moments in our lives when we wish we had taken action sooner. Don't let procrastination reign on your retirement parade. Act now before it's too late. Please call our office to set up your no-cost, no-obligation retirement income review today.
Welcome back to Wealth in the Winner's Circle with Harley Shanklin and Dave Williams. And I was told in my ear here, it's not just the SMART process, it's the START process. SMART, get started. Be smart and get started, right? The START process. That's fantastic. So we're talking about risk. Now, I wanted to ask you both. How many times, though, does somebody identify themselves as moderate? You know, I think I've been relatively conservative. Dave, they come into you, they show you then the 401k, whatever they have their investments. Does usually what the person says match up with what they show you?
Most of the time, it does not.
It does not?
It does not,
okay.
No. I've even had folks come into my office and say to me, I am a very conservative investor, and this is my portfolio, and I have been told that this is a very low risk or no risk portfolio, and all I'm looking at is a stack of mutual funds, I'm going, we have a problem, Houston. There is a definite mismatch. And I think it's an educational one. Most people don't get educators shown what they're doing or where they're going because they have no, if you will, end purpose in mind. They just go into an office and they say, this is the portfolio we're going to put you in. Don't worry about it. It's low risk. It's diversified. You'll be okay.
But what always baffles me, and maybe I just haven't seen some of the portfolios that are around the area or as many as you both have, but so far with the limited exposure I've had to 401ks, I'm always having to pick individual funds. I have yet to see a portfolio pie where I can just put everything and they're going to allocate it. Maybe it does exist out there. I guess there's those target date funds.
Right.
But why is it they're leaving the individual investor for 30 or 40 years to have to pick the funds themselves? I think that's one of the ways that we get over our risk skis, if you will, here in the flatlands of Indiana. We've been out west, though, every now and then, doing some skiing.
We've got the Paoli Peaks to the south with some man-made snow in the
That's right,
wintertime.
I've been on those.
No, you're right. There is no one at the 401k plan that's helping to really diversify things. And you're right. There are those target date funds out there that do change as you get closer to that date. And for many of you out there, that may be how you're allocated in there. But unfortunately, what we see oftentimes is when we assume that we're in those target date funds, that they are conservative, that they are quote unquote safe. But oftentimes it's just not the case because once again, when we think about the investments that are held within those target date funds, they move in similar patterns. So when things are going well, it's all going well, it's all going up. And when things are not going well, it starts to go down. And when we're in times like this where we have a lot of market volatility, that tends to remind us.
Yeah, it also reminded me of something. I think I saw it on one of your online webinars. You do a market update. Maybe you can tell me the different kinds of events. You do a half-year event. You do all kinds of updates like this.
Yeah, we take really seriously keeping our clients in the loop as to what's going on. 14 years ago, we instituted a state of the market every year in the beginning of February and a halftime report in the beginning of August, mainly to bring our clients together in one central location on a Saturday morning, give them a update on the economics, make sure they don't go to sleep during that presentation. In layman's terms, tell them what we're thinking, what's going on. And then before the pandemic started, when things really started going bad, we initiated a webinar where we do a monthly update online. They can sign in, see it, and see a replay as to just what's going on with our investment strategy. What are we thinking? What's happening in the market? Communication is the key. People want to know what's going on, and Harley and I put it together every month without fail and say, here's what's happening, and call us and talk to us about it.
And that's that's one of the biggest risks out there, Spike, is when someone doesn't have somebody else to turn to ask questions, right, to get advice. Then they end up making sometimes hasty decisions or sometimes no decision at all. How many times have all of us out there made a decision out of fear? And I think that's one of the biggest problems that we see is for those who don't get that advice out there, who don't want to partner with somebody, we see one of two scenarios play out where we either underspend because we're afraid that we're going to run out of money, or we're overspending. We're just drawing out without really paying attention how we need to make those adjustments.
So is our retirement end line? So let's say we reach the checkered flag, we get to the retirement.
But it's not the end, Spike.
Okay, well that's what I'm wondering because that's what a target date fund, you're supposed to pick kind of that year or at least kind of an area of when you're supposed to retire and it's supposed to reduce risk for you. But I'm like, what if I'm retired for, well, let's say for me 20 years, my spouse lives on another 30, 35 years. I can't just be in no risk for 30 years.
Absolutely not. I always go back to the bond funds because we typically can consider those to be safe, right? But if we look at 2022, the bond market was down 14%. So for those of you out there who may have been holding a bond fund, you were probably very frustrated and upset that your safe bond investment was down 14% and the rest of your equities were also down another 20%. So that's just kind of a misconception that a lot of folks have.
You guys, you're giving me a headache here. Okay, so what do I do with that 401k that I get to my retirement Am I supposed to then break it out into different timelines myself? I mean, it's splattered in all of these different funds. Do I try to find a platform then and I put it into different pie shapes? Or, I mean, obviously as financial advisors, this is what you do, but there really isn't a lot of instruction of what do I do? How do I look at timelines? So like, how do you actually do it when somebody's getting to that retirement?
Well, you know, and that's what we see out there. The danger right now is a lot of people are told just keep it in this fund and away you go, and there's no, quote, exit strategy. We'll talk about exit strategy is how do I take that thing I have, that pile of money, and take care of my family? In other words, what's going to happen to it? How do I create income? There is no, unfortunately, instruction manual that the companies, your pension, your 401k providers give you. They'll send you a document that says you're going to get this and this from Social Security, and here's your income. But what about taxation? What about inflation? What about market risk? What about adjustments? All of that needs to be taken in place. And that's with our START process is what we do. You know, we take and give you a starting point, say, here's what it's going to look like. But again, I'm going to emphasize it's not a static thing. In today's world, you have to adjust every year, review it, update it, keep it relevant, and see where we're going.
And then with that, can we then get out of the markets to help us avoid the volatility? Or is there some of it that's in the market? Can we look at income tools that are usually provided through insurance companies, along with that Social Security that gets a cost of living adjustment? I mean, it gets a cost of living adjustment the next year, so you've already spent the money that's going to cost you more. So, it sounds like I got to keep some of it in the market.
Absolutely. We are big believers in the market and the efficiency of the market over time. And I think that's the important thing to take into consideration is that we have to give the market time to do what it does best. That's why, and this is one of the things that Dave helped pioneer in the early parts of his career in this industry, is the idea of time segmenting, putting our money into buckets as to when we're going to need it. So we can think of it as simple as that liquid bucket where we want to have 1 to 2 years worth of income. What that does is it buys you time when the market does go down, that you don't have to worry about what's happening in that market-based money. And then we have our safe bucket where we're getting some moderate growth in there, but maybe it's protected from the market. Things like fixed index annuities where we don't have to worry about what the market does. We're not going to lose anything, but we are going to get some sort of interest. And then we move on to that growth bucket, and that's the market money. We want to try and save that money for that long-term future that you all have out there that we want for you, but that we can also go to refill those other 2 buckets as we go along the way.
You can get started on your own smart process for retirement right now. You can call the phone number. You can set up a complimentary appointment. We'll take you through the entire process. Of course, we're going to talk about risk, but then take a look at your portfolio. What kind of income could it provide? What steps do you maybe need to take to prepare yourself a little bit more for retirement? Are you ready to go right now? Do we maybe need to work another year or 2? And then healthcare decisions, Social Security timing, estate planning. The START process is all of these elements and more. What's on your mind for retirement? Call that phone number. Set up your appointment right now. Now, one of the things the fellas told me about, since this is called Wealth in the Winner's Circle, is what is the thing that's like wearing down your tires going around the track to your portfolio in retirement? We'll discuss that when we get back right after this.
As a kid, I wanted nothing more than to be a hero. But little did I know I would actually get that opportunity, and it really started for me. The catalyst was 9/11. And as the war on terror continued to unfold, I put my money where my mouth was. And I ended up landing with the 101st Airborne Division and became a light infantry medic with them, and I spent a total of 28 months deployed overseas. I had the opportunity to serve with some of the greatest men and women that this country has to offer. And I had the blessing and honor to be my wife through that journey. And after 10 years of serving in active duty, we started to build a family. Our son Leo was born, and I quickly realized that it wasn't the environment that I wanted to raise a family in. It meant moving around, and it meant risking my life in ways that may put me in a position that I may not be there to play catch with my son, right? To walk my daughter down the aisle eventually. And so I started looking for other opportunities, and that was when my father-in-law came to me, and he ran a financial planning and wealth management firm in Indianapolis. The relationships that he was able to build with his clients, it really resonated with me because I felt that same care with those men that I took care of overseas. And so I made the leap, became a financial advisor, and I like to think that I've continued that mission. Rather than their medical hero, I'm their financial hero.
Welcome back to Wealth in the Winner's Circle with Harley Shanklin and Dave Williams. We're trying to identify risk, and we realize that for every one of the viewers out there, including if you're sitting next to your spouse or friend or brother or sister watching this show, everybody's got different definitions of risk. And whether that's what we like to do on the weekends, how we like to invest, and even looking at the same kind of portfolio. One person might say, that's okay. Another one might say that's way too much for me. And we're trying to define that, and you like to really define it by dollars. But what is the drag on the tires of our retirement portfolio?
Yes, that's a great analogy for taxes and the impact that it can have on our retirement portfolio, because there is a tax drag, and that is a risk. We have the risk of taxation, and if we don't take proactive steps, it will wear things down. Once again, we're living in an all-time low tax rate environment right now, and it's important to take advantage of that in a way that is efficient and makes sense for your investments out there in your retirement, to see how can you reduce that drag? How can you ensure that your race tires are going to keep up as long as you're running this race? And that's where we want to look at that piece of it through our retirement start process, where we look at the tax efficiency piece to make sure that we're managing that risk and helping to mitigate it as you go along through your retirement.
We're going to continue to talk about risk. Real quick, though, I want to bring up a free tool that we have that you've put together there, the RDWTaxTest.com. This will help you realize how much you have in tax-deferred savings accounts, a couple of very quick, easy inputs, and it'll send you this report to show you how much you're going to have to pay in taxes on those tax-deferred accounts, how much rubber you're leaving on the road that you're not going to be able to spend in retirement. The free tool here, the RDW Tax Test. Can we talk a little bit about your financial entire pit crew for retirement? How do they come to the rescue to save you, your literal financial vehicle? How many different folks do we have running around the car when we're coming into retirement to protect you from risk?
So we have a fantastic team in our office, between myself, Dave, our other advisor, Jeremy, and our whole amazing team that sits behind us on our pit crew team, helping to ensure that all of our clients out there are being taken care of, that their retirement race car, if you will, the engine is being tuned up, it's always being monitored to ensure that your taxes or your tires aren't going to wear out due to taxes along the way, that you're not going to run out of the fuel that you need to run your race. And along with that pit crew, we've got all the tools necessary, because as an independent fiduciary, we have access to all the tools out there. We are not limited to any one company or one set of products, and it's through that retirement start planning process that we help determine what is in your best interest, not anybody else, but what is in your best interest out there.
Dave, you said once in passing, and this isn't to scare anybody or anything, we said that every decision can affect the next one, and not necessarily in a bad way, but when you turn on Social Security can determine one of the factors in how much you're able to spend, how much risk you take, when and how you pay your taxes. It starts to become a little overwhelming, especially trying to do it on your own. But you say the decisions can affect and kind of domino on top of one another.
And they can. I mean, I see a lot of clients will come in and they want to buy a car, they want to buy an RV, they want to take care of the grandkids, they want to travel. And these are great things, and we encourage that. We want to help them plan for that, because just like there's sequence of returns in the market, there's sequence of withdrawal events that take place in your portfolio that may or may not be conducive to a good outcome. We need to look at that. Inflation. Think about this. 7 years ago, was anybody in this country worried about inflation?
We've I think in the last few years have talked more about inflation than I think any of us ever did, including yourself. In the beginning, like normally you had to say, hey, what's this 2 or 3% over here? That's inflation. It happens. We have to put it into the calculations. And now people get it.
Right, and we have to take that into consideration. But here's the good news, and I kind of smile about this because it's become very prevalent over the last couple of years. I have a lot of long-term clients that have been with us, and as they grow older, they've accumulated a lot of money, and they're not spending it fast enough. And one of the first conversations we have every time when I meet with them is, tell me about your last vacation. Tell me about where you're going. What are you doing?
I like that.
Because it's not just about taking this bundle of money and hoarding it. It's like, how do you make it work for the advantage of you, your family, your children? What do you want to see out of it? And so this planning we do, Spike, is not just to, if you will, guide us through the negativities of life, but also how do we get them the rewards of life based on the money that they have.
Yeah.
My mom actually is a great example of this. My mom always dreamed of traveling the world, Spike, as many of our viewers out there probably do. You want to go to Italy, you want to go to Europe, all of these things, but she was crippled with fear as to how do I do that while also ensuring that I don't run out of money. And it was because there wasn't a plan in place, and it's through that retirement start process that we are able to help give her the confidence. She has now hiked across the Scottish Highlands. She's hiked the coast of Portugal, and she's getting ready to take a trip over to Greece and Italy and do the same thing. And that's the power of the retirement start process, is because it gives you the confidence. And that's, once again, it goes back to the why. Why is this so important? It's because we want you to have the confidence to live the retirement that you want.
Harley, I'll let you take us out here in just a moment here, but for folks who are seeing this for the very first time or seeing the program, the START process, it's your financial plan. It's your financial planning process. It's your written financial plan to live the retirement that you've always wanted to, working with the tools that you've already put together. Some programs or some advertisements you'll see out there will say, if you have a minimum of this, give us a call. Once you hit to here, you should maybe consider your planning. At RDW Financial Group here, we want to help everybody around the area make sure that they can be and stay retired. You're part of our community. We're part of your community. We want to make sure when we're driving around that everybody's got a smile on their face. So tell us about that process. What are they going to get when they call the number?
When you call that number out there, we're going to sit down, we're going to have a great conversation, give you an opportunity to ask questions, learn more about you. We'll take you through your secure income, tax efficiency, advanced planning, risk management, to help put together that tailored investment strategy that's going to give you the confidence to live your retirement dreams, nobody else's.
Dave, Harley, thank you both very much. You can now call that phone number, or you can use your smartphone and open it up to the camera function, point it at this QR code, and click on it. It's going to take you right over to their landing page. You can schedule your own appointment right now, or call the phone number. People are standing by. They'll schedule it for you. 833-856-1393. Thank you so much for watching Wealth in the Winner's Circle. We'll be back next week.